me immense pleasure in welcoming you all for the earnings call for the year ended 31st March 2024. A brief note on the market. The commercial vehicle business was more or less flat. With the light commercial vehicle, there has been a small uptake, slight impact, but overall, I think in the mixture, I think it has been flat. Exports remain under stress for the financial year because of the new developments in the geopolitical situation. On the passenger vehicle segment, we have seen growth in the SUV portfolio, which we are present as Craftsman. Now I'll go to the consolidated financial highlights of 2024. In comparison with FY23, it is strictly not comparable, so turnover-wise it's not comparable. Because we had only 2 months of consolidation of TRSN last year. So 4,452 crore versus 3,183 crore. But the breakup of the current turnover of 4,453 crore is quite interesting. The powertrain has been 1,558. Aluminum products has been 2,154. Industrial engineering has been 740. With this, the dependence on powertrain has reduced, even though powertrain is good logical growth business for us. We are no longer dependent only on the powertrain for Craftsman's consolidated growth. The EBIT margin has been 619 crore against the previous year of 475, again strictly not comparable. Powertrain has been 292, aluminum products 322, and industrial engineering 49 crore. Unallocated has been 44 crore. On consolidated ratios, debt equity, we are in a comfortable situation of 0.88. Debt to EBITDA, still we are manageable level as per our targets are concerned. It is 1.72. EBIT margin has been 14%. ROC has declined marginally from 22.3 in FY23 to 22%. But the ROI has improved from FY23, which was 19.5 to the current year of 21%. EPS has improved from 171.56 rupees to 144. 144 when considering the owner funds of 76% stake in DRX. Standalone turnover has grown only marginally. I think it is on record, so I will not elaborate on that matter. There has been some little headwinds in the powertrain business, which we didn't expect a little because of the slowdown in Brazil. There has been inventory correction, plus also the commercial vehicle slowdown was sharper than expected. We are geared up for higher capacity in Craftsman as a whole. Also the Tier 5 or the Stage 5, we call it, for the construction equipment business, we invested heavily, put up new lines. The government regulation has not kicked in, has been postponed. There has been similar situation like earlier in the BS6, which has happened. We are waiting for the production to start. The storage business has been flat, more or less, for the company because of the slow in the investment by the e-commerce and other related companies. CapEx has been higher than what it was initiated earlier for two different reasons. One reason is 2 new plants we have initiated because the market opportunity and the opportunities offered to Craftsman is quite big. So we decided to take it on considering the future growth aspects. CapEx stands at 580 crore. More of that detail when we go for the discussions. The major subsidiary DRXN has been 1,246 and EBIT has been 196 crore. Regarding fundraising, since we have been little leveraged now because of the huge expansion and also the acquisition which has been done a year back, we have decided to deleverage by reducing the amount of debt. So we are raising funds via the public, raising funds. I think the modality of that will be coming in the near future. The timing of that is still uncertain, so it is only the enabling resolution we are going forward as of now. With this, we leave the floor open for discussions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use answers while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mumuksh Mandlesha from Anand Rathi. Please go ahead. We are unable to hear you. May we request you to unmute your line?
Is it clear?
Yes, sir. Please go ahead.
Thanks for the opportunity, sir. Just starting, can you share the value addition numbers for the Q4 quarter, sir?
Quarter 4 you want?
Yeah.
The powertrain has been 226 crore, aluminum products 107 on a standalone basis, industrial engineering has been 59.
Got it, sir. Sir, just on the margin fall we saw in the auto powertrain segment, about 300 bits sequentially. Any reason for the fall, sir? Was there any one-off in the number, sir?
There is, in a way, not directly a one-off, but indirectly there's a one-off. One thing, we have increased capacity to a large extent, so fixed cost has gone up. So the top line has not improved along with that matter. And also we have invested for new plants. The Faridabad new plant is ready for, again, stage 5 production, which has not started. And the other portion is the other exports have not picked up as we expected. This was the main reason. And the other one-off, when you look at it one-off-wise, there has been a major inventory correction in going into Q4 by our customers. All our leading customers, both in the commercial vehicle segment within the country and also in South Africa, plus also the other domestic players who are was expecting to move to Tier 5. They had reduced their inventory on Tier 4 products. Similarly, also on the passenger vehicle SUV sector after the high for this year, there has been a pile-up of inventory at the customer end. So there was a correction, which was quite steep. In fact, some of the customers didn't lift material from middle of March. So that way it's a one-off.
Somebody, would you estimate next quarter onwards we should be back to at least Q3 levels, sir?
I think for the full year, yes, we will be on a growth track. Q1 still will be on in the domestic area. Will not domestic market. I don't think there will be much changes because it will be still muted. But for exports for Daimler, I think that is started in full swing again from Q1. So it will be a mixed quarter, I would say. Q3 and Q4, of course, our costs will be lesser in Q1. I think repair and maintenance is mostly behind us. So generally, I think we'll have a better financial result for Q1, but I don't expect too much top-line growth for Q1. Beyond that, I think we are okay.
Got it, sir. On the auto aluminum performance, we saw a good margin improvement in the both DRXN and standalone business. Sequentially, the margins have improved, while the revenues are broadly flat. So what led to the better margins in this business, sir?
I will answer your first earlier question because I have left out something. We have invested heavily for off-highway products machining, and also now we are also backward integrating to a certain extent on the casting front. So that has not seen any revenue. There has been only expenses, which has been expensed off because these products are a long gestation for development itself. So I will come back to that later in further Q&A. Now on the aluminum products, I think between the two companies, we have a lot of synergies playing around. Playing out for us in total. That is the major portion. The second portion is the product mix. What we have in Craftsman is all 98% which is machined, and most of it is critical machining. So there is a machining value addition which has played out better for us. Earlier the margins were muted, not because of our operational efficiency matters alone. I would say that was only marginal, but I would say the operating leverage today capacity utilization has improved, and the fixed cost absorption has been better totally. If you look at the value addition portion of it, and it is more or less pro rata, maybe some few points improvement is there. but the fixed cost absorption has been far better in the standalone business. In the acquired company also, there has been quite a good ramp up on the revenue as a whole, and the synergy is playing out with some better cost management. We are able to manage the margins.
Just lastly, can you guide the capex for the FY25 and 26?
Yes, FY25, we'll be looking at a capex. We'll be completing the stage 1 of both the Bhiwadi plant as well as the Kodavadi plant in Coimbatore. With that, we'll be looking at a capex slightly above 500 crore. The exact number we have to freeze now. I think there's the board approval. So this is what we look at it.
Got it, sir. I come back to for a question further. Thank you so much.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Mukesh Saraf from Avendus Spark. Please go ahead.
Yes, sir, good evening, and thank you for the opportunity. My first question is on the aluminum segment. Within the standalone business, we've seen some sequential growth in revenues. Could you give some sense on have we started seeing some contribution from some of those export orders that we had to Europe? Have we started seeing some of those, and could this ramp up further in this couple of coming quarters?
Regarding export orders for the PV, it is starting only from Q1. It has just started now, little. Okay. So we will be seeing offtake from Q2 of this financial year, and it will peak in Q3, Q4 is what we expect on this matter. That is what is the projections we received. We have not seen much in the Q4 of last year on the passenger vehicle segment for export. But domestically, our business for the powertrain, for the passenger vehicles, for the standalone, we have started production in the Q2 a little. Q3 was the ramp-up phase, and Q4 was we are supplied at full quantity that resulted in the numbers. That is going to continue for the full year, financial year, and for the next year. So added to that, I think the export revenue will add to the aluminium. So aluminium traction is quite strong, similar to the current year. Last year, the current year also looks strong. Both for Craftsman as well as for DR.
Right. So I think you had last time guided that we can do probably 15% odd growth in F25 in the standalone aluminum segment. So you stick by that number, sir?
Yes, we stick by that number on the aluminum growth on the standalone basis. And for our subsidiary also, we are looking at some export to Korea, which will come in Q4 of this year. And there's a 3-year contract. I think that is also a good order. And in FY26, for us, the Talagon plant of Hyundai also will be in operational. So that also will add some revenue onwards.
Right. So just coming to this DR Axion, I think sequentially we've seen some decline. But when we look at, say, Hyundai, Kia's production, there wasn't a decline in production QOQ. Anything we should read into this QOQ decline in revenue, sir? 3Q to 4Q.
We have the western region also a major SUV manufacturer as a customer both for DR Axion as well as Craftsman. We supply similar products on the aluminum casting. There has been a very, very steep inventory correction in that particular quarter. They were ramped up for higher numbers.
Got it. Right. I think that's it from my side, sir. Or just a last bit, sir. Within your PT powertrain standalone, could you just give a mix of CV, tractors, off-highway?
Yes, please. I will do that and then talk about the top line. You want it for the quarter 4 or you want it for the full year?
If you could give us both, sir, 4Q and full year.
Okay. The powertrain revenue-wise for commercial vehicle has been around 880 crore. Off-highway was 272 crores. And the tractor was 210. And the SUV for the passenger vehicles was 196 crore.
Sure.
And for Q4 of F24 on commercial vehicles, it was 217. Off-highway was 63. Tractor was 48, and passenger vehicles SUV was 61.
Okay. All right, sir. Thank you so much for this.
Welcome.
Thank you. The next question is from the line of Karan Gupta from Varanium. Please go ahead.
Yeah, hi.
Mr. Karan Gupta, please use your handset, sir.
Just using the handset. So could you...
It's not very clear, sir. It's very muffled, sir.
Hello. Now it's clear?
Yes, sir. Slightly better, sir.
Yeah.
You can go ahead.
Yeah. So for the quarter 4, can you give us the value add segment wise?
No, we can give for the full year the value add segment wise. I think for Q4 it will not be relevant because it is customer.
Yeah, it's fine.
So you want the value add for the full year on the...
Yeah, segment wise.
944 crore on the powertrain, 391 crore on the aluminum products, and 276 crore on the industrial engineering.
Okay, aluminum, what's the aluminum?
Pardon?
Yeah, what is the aluminum?
Aluminum was 391 crore.
Okay. Yeah, thanks. The second question is regarding the margin side of the powertrain and your industrial engineering part. So in the industrial engineering part, again, the margin is coming down quarter on quarter. So what's the any volume you are focusing on as of now for the industrial engineering?
I will talk about the powertrain first as this is a major segment. Powertrain, as I had mentioned in the last 2 earnings call, we are now focused on off-highway and stationary engines, which is under development there. So there have been a lot of development expenses. We have received orders. I will not be able to reveal the orders currently, but all of that will kick in FY26 onwards, and good traction is there until FY28 on the new businesses. These are very sticky businesses, and these are all major companies, global companies, and mostly export-oriented. And that expenses has investment has dragged down some of the margins on the powertrain, whereas the other existing customers did not have much traction on the current businesses. Coming on the industrial engineering business, the storage business has been flat totally overall. Being flat has added to our fixed cost not getting amortized because we are ready for more expansion and more growth in that business. So today the opening order book is quite substantial. That means 50% of last year's sales on the storage solution, our opening order book is there on April 1st. So we are quite confident of growing 25-30% in the storage business in the current year. So that with better overheads absorption, because this is marketing, service, and also erection, end-to-end design team, everything, the overheads are there on the storage solution. With better revenue mix, I think the margins will come back on the storage solutions. On contract manufacturing and other products like other than storage, we didn't see much traction in the last financial year, but here also we have geared up with the Kodavadi plant, which is a multifunctional plant with addressing the powertrain as well as the industrial engine segment. We have started the machining activity for various businesses, like the renewable energy businesses. We have started, revenue stream has started flowing in the last few months, I would say. So this will, when it comes to a full year, it will bring revenue. These are gearboxes for the gearbox housings machining for the windmill. Later on, we are backward integrating also into the casting at our new facility, which is coming in Kodavadi. This are all for export. Our customers are from India, multinational customers are exporting. So we see a good traction going forward. Today, the base is so small that a small capacity utilization change the margins in a big way. It was the similar case in aluminium few years back, that on quarter we were not able to give a very stable number, and now that the aluminium business has grown, we are able to be stable. In the industrial engineering business, still it is small. We have to wait for a few more quarters for that to scale up and be more consistent on delivery performance, on result performance.
Okay, fair enough. For powertrain, I have one follow-up on that. Previous quarter you said some kind of refurbishment is going on. So it is done now, or will take 2 quarters more?
80% is done. We have to look at the point that FY19 was a high year. FY20 was expected to be doing good, didn't do well. We had the COVID. Post-COVID, we had a ramp-up which was quite steep, so we didn't have some of the maintenance which we should have done. So now we have used this lean year to do the maintenance. 80% of it is done. We will not have a repeat in the current financial year.
Okay. And the equity you are raising around 1,400 crore, right?
So the number is still not finalized, and when we are raising, or there is no timeline defined to it, very clear. As I mentioned in the last few earnings call, we are still open for acquisition within the country, and a small overseas acquisition, maybe much lesser than 100 crore, which is give a strategic advantage in one of the key businesses where we are in, and where we are focusing in for the next decade, I would say. So with that in mind, also I think the capex coming in for the 2 plants, that is the Kodavadi plant and the Bhiwadi plant, is also major investments, and we have borrowed already totally. We have to reduce our borrowing. That is one of the reasons for this sort of enabling resolution we have taken.
Okay, and the reason behind starting greenfield instead of brownfield, what's the the strategy you are seeing there?
I will first answer the Coimbatore facility, which is a 50-acre campus. The current 50-acre campus is, which we are, it is almost full, which is housing all the 3 segments of the business, mainly the powertrain, the aluminum products, and industrial engineering. So we have gone for another campus of 50 acres. The land was acquired in stages over a number of years, but we have started the construction activity in the second half of this year after we got commitments from our customers. These customers are the first customers to commit were industrial engineering customers, followed by powertrain customers for the off-highway vehicles and stationary engines. So with this, it is an hybrid foundry which we are now putting up for the cast iron foundry. So far, it is notable to note that we continue to work with all our foundry partners wherever they can supply. We continue to source from them. These products are not available for sourcing within India, except 1 or 2 foundries who are not making these castings, and they are also full of capacity, and they do not have capacity, and we are having good global opportunity. So we checked with our foundry partners, and there's nothing on the cards for the coming year or 2. So we decided that we are not going to lose the opportunity, and we've gone for the investment at Kodavadi. So this will be a multi-speciality foundry, but we also got business from the renewable energy sector, mainly the windmill gearboxes, and this is quite a sizable business going forward also. It will be stable, I would say, totally overall over the number of years, with the focus globally on the renewable energy business. And also on the capital goods sector, we are seeing that imports are getting reduced. More and more Make in India policy is coming up. So we are, the castings requirement are going up in the country. And this is one of the few foundries which will be coming up on global scale in the country for these heavy parts. I'm talking about heavy parts means weighing anywhere from 1 ton up to 20 tons. And these are having critical machining, where we already are doing some of the parts machining for the past many years. So this will be a strong point for us. We are still open to working with all our foundry partners for even buying their castings and continuing there or working for them in a way. So this will continue our growth path on the powertrain business, and now it will lead to a new growth area in our industrial engineering business, which was we have not been concentrating on the sector for some time because of the other high growth in other segments of the business. So now I'll answer the Bhiwadi plant if I'm done with answering the Kodavadi facility. Any questions on the Kodavadi facility? Sorry, on the Kodavadi facility now first.
Yeah, you can continue.
On aluminium, where next 2 years or at least 3 years, we have traction from our Coimbatore plant on the aluminium for Craftsman, and also the Bangalore plant of Craftsman, and also similarly our subsidiary DR Axion. All have got good order booking. So year-on-year growth on FY25 and FY26 and even FY27 is on the cards on the organic brownfield, as you had mentioned. So this is one thing. But the Bangalore facility is running out of space, so we may have to have one more location in the south apart from Bangalore, because our customer demands are going up. That may be coming in phases because of the add-on plant only. But we have not been present in the west as well as in the north all these years. So we see opportunity there, and we have very strong players in the west, and we see more opportunity in the north. So we are putting up the facility in Bhiwadi. And there also we are looking at an hybrid plant. To start with, it will be aluminium products. We are also going for structural products, which will be end use of these products, maybe EV or non-EV also. So that is okay for us. That will be reducing our dependency on ICE-related parts, which we are doing for the two-wheeler on standalone business overall. So that is one big change. And we see a lot of growth opportunities in the northern region because all the manufacturing is centered in the northern region for the auto majors, I would say. So this is the reason for the greenfield, and the distance between south to north is simply too high for any transport of such parts.
Thank you. Sorry to interrupt, Mr. Karan Gupta. May we request that you return to the question queue for any follow-up questions, as there are several participants waiting for their turn. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Our next question is from the line of Pranay Roop Chatterjee from Burman Capital. Please go ahead.
Hi, good evening, everyone. Am I audible?
Yes, sir. Please go ahead.
Yeah. My question, I have only one question. Beyond what you have already mentioned, are you able to disclose anything regarding the new off-highway businesses that you will start from 2026, and you mentioned that you have visibility till 2028? Because I'm looking at your business today, your powertrain, the annual numbers you've disclosed, where commercial vehicle is 880 crores, let's say 900 crores rounded off, and your off-highway is 270 crores, right? So if I look from the next 2-year perspective, we might not see a lot of growth in trucks. In fact, we might actually see a decline. So how large would be the quantum of these off-highway orders, number one? How many clients would they be? Is it like only one client or multiple clients that you're working on? And are these orders which have already come in, or is it that you develop and then you might get the order?
I'll answer your question in total, but I will also have a disclaimer there, because we will not be able to make customer names, but because of the competitive nature of the industry, and also it is strategic nature, which we will not be able to disclose. But within these guidelines, I will answer to the best of my ability. You mentioned right, the off-highway business has been 272 crore for the full year for Craftsman, whereas the commercial vehicle business mostly within the country has been around 880 crore. And you are right about that we have to wait for the growth in the commercial vehicle business overall, whereas on the other segments of the business, that are multinationals who set up plans for engine export and transmission export to rest of the world, they go step by step in that approach. They're ramping down their facility within their home mother country, or maybe downsizing their export orders from the China facility and resourcing them into India. We have to wait for that. They need to get their act right, so it will take. These are very well-established multinationals we are working with for the last 3-4 years. Lines have been set up, capacity utilization has been very, very poor. But we are sure that this business will come in on that segment also, but it will come in a year or two. So now to talk about off-highway, I would say I will put the off-highway in two segments. One is the off-highway on the construction equipment, another is the stationary engines. I will now talk about the stationary engines on power generator business. It is about 32 billion is the global business. You know, the American number one and number two all are the world number one and number two on these businesses. And one of these companies, I think, has got a consolidated revenue of more than $80 billion. Another is $40 $50 billion, something like that. Bulk of the revenue is coming from the engines and related to the engines only. And we have other players in Europe as well as in Korea, but Korea is out of our market condition, and something in Japan. So we are working with four majors now, and two of them we have. One of them we have received already the orders. One of them we are very close to receiving the orders. That has been back and forth. It takes huge investment from the OEM side also to invest, because of the each of these engines sometimes as big as $1 million each. So the developmental cost is huge. The time is also huge. So we already embarked on that 2 years ago, I would say. And on the machining side, we have won orders. We are getting this casting from as far as South America and also in one part of Europe, I would say, not mainland Europe, but these castings are coming into the country and we are machining today. So to ramp up and really take the global market pie, we need this casting facility. So we look at quite a sizable opportunity here. So we are looking at in 4 years' time, maximum 5 years, at least $100 million increased revenue on the powertrain business for this segment of off-highway and industrial engines. The growth is coming not only a little from mining and other things. Yes, it is coming, rare earth mining. Now base metal prices have shot up. Even copper has shot up. So mining is going to increase. That is one portion which you are all aware. What has changed in the last few years is the power generation required for artificial intelligence data centers, which is quite big. So this for the pipeline to fill. Yes, there are alternative storage solutions which are coming up as backup power, but the steep ramp-up requirement for these particular areas is also giving a good opportunity for Craftsman to enter the business. Coming back to whether it is an ICE engine, today these engines are almost coming to reducing the carbon footprint by 90%. They have multiplex fuel. They have HVO as a fuel. So, and they also are working on hydrogen engines. The same engines are now flexible. I think there are big major companies in Germany which are leading this sort of development, apart from our market leader, two leaders in the US, North American market, which you are very much aware. So these are also the power density of these engines are increasing. So when power density needs to increase, that combustion needs to take place at higher pressure with multiplex fuel. There are new developments also happening. And when new developments are happening, sourcing needs to be redefined. And when sourcing needs to be redefined, this geopolitical situation, the China plus one, everybody wants one more manufacturing facility other than China. It was always in Europe or in South America. These capacities were, the vendors were there or suppliers were there. Now with Europe, the workforce a little shrinking, and the opportunity for India growth story has to come. So it is a chicken and egg story, and unless we have a sizable infrastructure, we cannot talk to these 4 or 5 majors in this business. So, and we are not present in this business. And our foundry partners are also working with us on the same product line. So we have already given orders to them or working with them on this matter. So that is parallel activity. Wherever they are not able to supply or if it's out of their current manufacturing scope, that is where we are investing. So this growth story will go up at this 100 million in 4 to 5 years' time. Only the additional business on not the organic growth in the current off-highway business, this new business will yield around 100 million.
Thanks a lot, sir. That's very descriptive. Thanks. I'll go back to you.
Thank you. The next question is from the line of Basudev Banerjee from ICICI Securities. Please go ahead.
Yeah, thanks. So just continuing with the earlier question itself. So, with almost...
Sorry to interrupt, sir. May I request you to use your...
We're not able to hear you properly, please.
Audible?
Yes, sir. This is better.
So just continuing with the previous question, like truck revenue plus tractor, both are going through a decline phase as such for last 6 months. And as you said, OHT is also not doing well. So under that circumstance, how do you look at powertrain overall as a revenue for next fiscal? And how to look at the other new areas in FY25 cushioning the over powertrain, if at all, not 2 years or beyond. So if you can just explicitly highlight how to look at powertrain revenue next year. And second question is, as you said, 80% of repair and maintenance work is done, maybe one more quarter left. So post that, how much margin improvement in powertrain one can expect? Because operating leverage in powertrain ideally should remain subdued. In fact, incrementally it might worsen further. So how to look at powertrain segment margin in 25 also?
My sincere request is, we have been always very careful about giving any guidance, and we have not given any guidance in the past, only some broad numbers.
Yes, broad only, not explicit guidance.
Yeah, thank you. So for what we see is our current business will be flattish on the powertrain. Our new business, a small portion is kicking in this year. So again, we will see high single digit or a low double digit growth on the powertrain. But with better cost control, I think we'll be able to deliver better results with also the repair and maintenance more behind us in this financial year. So we can expect a better year as far as Craftsman is concerned.
And second thing, sir, there's too much of dichotomy on one side, so much news on government capex, infra projects, metal mining doing well. And on the other side, commercial vehicle demand remaining subdued almost for preceding 6 months. And outlook is also subdued for at least the foreseeable future. So being a key supplier to commercial vehicle cylinder blocks, so how do you see demand outlook from the key CV OEMs, whatever period you can explain, sir?
While I mentioned on FY25 and most part of FY26 also will be more or less as you had mentioned, as what I foresee on this matter. But the next change has to come on the higher horsepower engines. If you look at all the developed markets, they are operating between 350 to 450 horsepower engines. Currently, all of our engines are, 90% of engines are below 250 horsepower. So I see that as a step change. This means bigger engines, bigger gearboxes, with more fuel-efficient trucks per kilometer covered on this matter. Higher torque on the gearboxes today, 1,300 Nm is what is the maximum here in India. And most of them are operating at 1,100 Nm. So we see that in the global scale, 1,600 Nm. And any commercial vehicle, whether it is even countries like, of course, China, but also in countries like Brazil, also they have moved to 13-liter engine long back for major portion of the requirement. They don't call a 300 horsepower truck as an heavy-duty truck. So this is the big growth driver from FY27 onwards for Craftsman when this change starts to look place. But meantime, yes, there will be subdued growth on the powertrain business for this segment, I would say, the commercial vehicle segment. But it will start. I hope I answered that holistically.
Yeah, definitely. So you believe by FY27 onwards, these domestic CV players will start focusing on further higher tonnage trucks and higher horsepower engines themselves as such, but the fleet owners will also benefit from better fixed cost per unit.
So there are many advantages on this matter. Now, if you look at Craftsman's powertrain business on the commercial vehicle segment itself, we have grown not because the numbers have grown in the last 4 or 5 years until last year. It is because of the truck becoming from a light medium duty to upper medium duty. This is not heavy duty, really, in that sense. So we have benefited from the per vehicle content because of the larger engine or larger power, the transmission and axles. The engine per se, 98% of the engines being sold in the country are in the range of 6.7 liter. So whereas in globally, more than 80% is with 13 liter engine. So what it means is overloading a smaller engine leads to lesser efficiency of the powertrain itself totally. So this will change in the coming years surely. Second point is it is able to cover more highway. I mean, when the highways are good, of course, it depends on the highways. If they're good, they're able to make more trips per month. So the cost comes down quite dramatically for the fleet owners when they see the advantage. But to put it in a simple manner, I just request the understanding of the gentlemen and ladies and gentlemen who are listening to this call. I'm not making an apple-to-apple comparison. Sorry for that. I would say ATRs are moving to Boeings and Airbuses in the air sector. So this also is an ongoing migration on the horsepower and the tonnage of the vehicles, I would say. The slow-moving trucks will start disappearing in the market in 3 to 4 years' time, is what I feel.
Understood, sir. Thanks. That's useful.
Thank you. The next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Hi, Ravi. A couple of questions from my side. First, clarification for the Rajasthan.
So may I request you to use your handset, sir? Your audio is muffled, sir.
Yeah, is it better?
Yes, sir. Thank you. You can go ahead.
Yeah. Now, Ravi, so firstly on the Rajasthan plant, you indicated to start operations in FY25. Is that understanding correct?
Trial production will start in FY25. Yes, it will mature in 50% capacity will get utilized in FY26, for which we already have received the orders. 50% of the plant is already booked for capacity. That will be operational for FY26.
Okay. And secondly, with respect to the powertrain related orders which you're talking about, which you're expecting it to go to about $100 million in 4 to 5 years' time. Would this be largely done at the new Coimbatore plant, and that's why the need to expand even when we have seen some bit of mutedness in the overall powertrain business? Is that what is giving you confidence?
The off-highway for the global market will be only from Coimbatore. The machining will continue at the existing facility where we invested quite sizable amount in the last 2-3 years for the machining, and we are already doing the machining. As I mentioned, castings are coming from outside the country and we are machining, and we also secured orders for that. And the castings will come from the new Kodavadi facility. We are also getting castings from our very renowned, famous foundry partners who are supporting us for that, which falls into their capacity bandwidth. We are already placed orders with them. We are working together as partners in that business, and all that validation takes 6 to 9 months because of the customers' high gestation for validation because of the cost of the product and the risk of the product is very high. So all this will take place in the next 12 months. We will see revenue starting to kick in from the Q3, Q4 of FY26 onwards, and FY27, I think it will be a steep growth trajectory there.
Okay, so effectively, these, the segment which you're talking of, OHV and industrial engine segment, practically the first phase seems to be now largely booked based on the run rate which you're expecting of $100 million by next 4 to 5 years' time.
I will reel off some names, not in necessarily order, and I'm not saying who is our customer, who is not our customer. Are we in contact with them? We have NDAs, so we don't want. Look at Europe. Europe majors are Rolls-Royce. Of course, Rolls-Royce owns MTU. Then we have Einberger, which is also, they make a lot of gas engines. Then we have Lieber, which is also leading construction equipment manufacturer and engine manufacturer. We have MAN, of course, not only the truck, they're in stationary engines. Then we have the very big players, and also the big player in UK, which is of course owned by CAT, which is Perkins. Then we have Caterpillar themselves, we have Cummins themselves. So this is, you look at the size of these companies and the revenue, what they generate, and how much of the revenue comes from the powertrain business, directly related to the powertrain business. You'll be astonished to say when I said that the business is quite big, I just put a $32 billion, but if you add the revenues of these companies, it will be very, very much higher than that. I just put the stationary engines number of 32 billion. So when these companies want to grow at 10%, then you can understand the size of the offering which is there for us. We are very minuscule in that matter. And in North America, there has been announcements for 30-year plants, 40-year-old plants, which is not expanded for so far. Suddenly, their announcements have come for $70 million, $1 billion only in assembly capacity expansion. And everybody is booked with orders. I think this is can be researched in the market news overall.
Thank you. Sorry to interrupt, Mr. Gandhi. I request that you return to the question queue for follow-up questions. Ladies and gentlemen, in the interest of time and fairness to all participants, may we request that you limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. The next question is from the line of Vaishnavi Deshmukh from Yashvi Securities Private Limited. Please go ahead.
Hi, sir. First question of me is from the aluminium division. First thing is that now aluminium has become our biggest segment if we see the consolidated numbers. And what is your outlook for the aluminium prices? And we have around 1,000 crores of inventory lines. So what kind of inventory is it? It is high cost or low cost? Can you show some light on this?
See, the aluminum prices, as I mentioned, the base metal price now it is increasing overall. Yes, but anyway, this is a pass-through for our customer. The inventories are covering all the 3 segments of the business on the consolidated basis. It is not only that. We have a lot of steel also for our storage solution business, which is long gestation. The variety of steel is large. So it will not have any impact on the profitability per se, but maybe optically the EBITDA margin or EBITDA margin may come down, but I don't see any difference on the return of capital or the profitability.
Okay, sir. My second question would be, can you give the segment-wise breakup for the 500 crores of capex that you will be incurring in FY25, and what kind of ATO would be there? For I think for FY25, the only trial production will commence, and it will start 50% capacity would be for FY26. When will this be commencing?
Yeah, see, here it is a very, very difficult question. I think you will appreciate it when I think many of the audience would have visited our plant also on some occasion. We have a shared plant across 3 segments of the business. So when you're putting up infrastructure at the infrastructure stage, the basic infrastructure like the power, the buildings, as and when the segment improves, then we are able to allocate the segment. Yes, now in the Kodavadi facility, as I mentioned, the foundry is a common foundry for the industrial engineering as well as for the powertrain. So how much of this equipment will be allocating to that will determine on the order position and actual usage of the customer. Some will be, mostly will be shared equipment, some may be specific equipment, but the specific equipment will be booked on that. Now coming to the facility in Bhiwadi region, we are starting with aluminum and it will be 100% of the aluminum business to start with. But the land and whatever other things we have taken and the buildings what we are putting up, the buildings will be put up also for other segments of the business in the course of time. So we will be continue to expand on the capex in stages there. So yes.
Okay, sir. Thank you.
Thank you. The next question is from the line of Krishna Kukreja from Lucky Securities. Please go ahead.
Yes, sir. This is Pritesh. I didn't understand your comment on the growth challenge in the industrial piece of the business. Because I think it's back-to-back second year where the growth is...
Sir, may I request that you use the handset, sir? Your audio is echoing, sir.
Yes. It's audible now?
Yes, sir. Please go ahead.
So it's back-to-back 2 years where the growth is little bit different from what the beginning of the year it is promised. And now this year also you are starting the year with the guidance of fairly higher growth. So first to understand what is the challenge here in this business and what makes you again tell that you will be having a double-digit growth in FY25.
I'll come from a fact about today the storage business is 50% of our industrial engineering business. And that is not an order book which we carry for years. And totally it is an EPC sort of business or a product sort of business. And when there is some headwinds in the market, as far as our customers concerned, they can postpone their capex. That is the challenge, what we are given. E-commerce, it is in the public domain that all of them stopped investing in the last financial year, totally. So now in spite of the e-commerce being very, very low for us, we have managed to hold our top line in this area. So our firm order book today for the storage business, which is forming 50% of the industrial engineering business, is that we have now firm order book of 50% of last year's sales. So that is the reason we are saying that we'll be able to grow.
So what was this order book at the beginning of last year then?
That was negligible. I would say it was hardly 60-70 crores. Now this year we are opening the year at 200 crores.
For the storage business, which is half the business of industrial and engineering, right? That's how you mentioned.
Yes.
Okay.
This is the reason I'm mentioning that I don't want to give guidance and being asked a question because we have to listen to what customer says. Customer can order and not lift the material also on this matter. So I will be very careful hereafter by giving a number. What I am firm, I'll give a number. Yes, in good faith, sometimes we say that we'll be able to grow. But there have been, today, interest costs have gone up. There has been the election coming up. All of us have known already, but we didn't know about the Red Sea issue or we didn't know about this Middle East conflict. All this is there. So we have to take it with a pinch of salt that we are able to manage overall.
And between last year's 500 crore capex and this year's 500 crore capex promise, what kind of assets are coming up?
We have mentioned that we are putting 2 greenfield facilities, one in Coimbatore, which is Kodavadi, and one at Bhiwadi. This is in addition to the general maintenance capex and the normal capacity balance capex across all our 13-14 plants across the country.
So at Coimbatore, you will have the aluminium capacity coming up, and at Bhiwadi, you will have the powertrain?
No, Coimbatore is the industrial engineering business and the powertrain business for the heavy engines and the capital goods. That is the Kodavadi facility, which I explained thoroughly. This is the foundry which is coming up. I spent few minutes quite there, and the Bhiwadi facility is to start with on the aluminum side.
Thank you. Mr. Kukreja, may we request that you return to the question queue for follow-up questions. The next question is from the line of Karan Gupta from Varanium Capital. Please go ahead.
Yeah, hi. Again, the question related to the previous question. So, we are raising maybe debt and over the next couple of quarters maybe, which is not sure. But right now we have the debt, right? So what's the plan of deleverage the balance sheet? That's one. Second is, what's the cash flow we are estimating from these 2 new plants, which will cover our debt over the period of time without raising much external debt. So that's the kind of blueprint I'm asking.
Thank you, Mr. Karan Gupta, on this question. Now, we started during an IPO stage of around 1,400 crore top line, and our consolidated revenue was nothing different from the top line totally. So now we are at a different number, and there is some big outflow towards the acquisition of DR Axion. 375 crore money has left the company to create an asset which is also giving a good return on the our investment totally. So the debt portion has been towards a good allocation of capital. We are very, very, very careful on this matter. And today when we are doing some organic growth, unless we have that sort of capacities, the global opportunity is going to slip. With the base of currently on a top line of around 4,500 crore, how do we grow at a double-digit growth? This is quite substantial going forward, unless we are ready with the investment there. So I request your kind understanding of that subject. Now, what happens if we don't grow or we grow late? If we grow late, we may miss the bus on the business. As and when we get an opportunity, we have to grab that opportunity and move ahead. Otherwise, we will be stuck with the growth of the existing customers, where then we have to answer that our customers didn't pick up the material. So we have to create new customer, new avenues for growth so that we can sustain this growth. The other thing is a double-edged sword. No growth means we can be attacked on the inflationary angle. So on the old products, always there is a risk of declining margins over a period of time because of the inflationary pressure totally. So we need to get new businesses at new prices and emerging businesses also. So that is the reason we want to keep this. And we are very close to, I don't want to talk about number. I think we are not far away in the next year to 1,000 crore EBITDA number. I think this is, we may not get there, but what I'm trying to say is that your company is safe enough on a situation that it is interesting for many multinationals to work with Craftsman overall, without any sector concentration nor any customer concentration. If there is a sector concentration or a customer concentration, it is more risky for the Craftsman business by itself, and that's also a big risk to our shareholders' returns.
Okay. But any guidance on cash flow generation from these two plants? What we are estimating, because currently we are in the run rate of around 500 crore of cash flow.
See, now
additional incremental cash flow we are estimating from this two.
So if you look at our debt itself, we have minus the 375 crore invested in the DR Axion, and minus the two plants what we invested roughly around 100 crores. Around 100 crores already invested into the two plants put together in the last year financial itself. Then you remove that 475 crores in overall, I think organically our debt would have been very low if not for these sort of investments. And we have borne the interest also for the DR and Axion acquisition. That is also depressed our PBT in a way, standalone PBT. But look at the consolidated PBT, would have been benefited from that.
Thank you. We move to the next question. The next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Hi. Ravi, can you give revenue breakdowns for storage business?
Your audio is very muffled.
Sorry, we're not able to hear you.
Yeah, can you share the revenue for storage business for full year?
It is as flat as the last year, which I already mentioned.
Okay. For the full year. Okay. Got it. And of this, has the share of automated storage gone up, or that also has been stable?
No, we don't give an automated storage. Our automated storage is negligible. I will not say we are automated storage. We don't have induce segment. It is totally different in that way.
Got
we split our business on the storage in a different way. You're talking about automated, is it? Automated is around 100 crore on the 25% of the total storage business.
Sorry, how much?
15%. So, okay. Automated storage is around 25% of our total storage.
25%. Okay, got it. And lastly, DR Axion, we have seen a credible expansion in margins over last 4 quarters since we acquired the company. Would it be fair to say the current margins of 20% plus are largely reflecting for your efficiency measures which you had put in place in the last 3-4 quarters? And from here on, margins should at least remain stable at around 20% level, or you see further headroom to expand?
See, I have to be very careful when I answer this because on this matter, this is a plant which was set up in 2006, right? So then in the next few quarters, we'll start doing some repair and maintenance there. There will be also modernization things which will come up in the next few years. There will be also, of course, the workforce, we are able to cap it at a certain level, or even in a way for the products we reduce, we are able to improve the working efficiency at the plant level, but that also requires some semi-automation and automation. So there can be increased depreciation gradually over a period of time. So I think more or less depends on the utilization of plant. Around these margins plus minus, we should be there. You see, we are also dependent on the power and fuel cost, which is not passed on to the customer in that way. Second thing is also inflationary pressure on the wages, which is also not passed on to the customer. What the DR Action has seen is an addition of a ramp up of a customer, the benefit they got in the last financial year. So adding more revenue, as I said, we are likely to get some orders on the final stage of getting some orders for export to Korea, and also the Talegaon plant of Hyundai. How well they do for their sales will depend on our margins. Okay.
Thank you. Ladies and gentlemen, that is the last question for today. As there are no further questions, I would now like to hand the conference over to Mr. Srinivasan Ravi for his closing comments.
Thank you very much for attending the conference as well as all the questions we answered. What I wish to say, as Craftsman, we have a philosophy, we should have an engineering advantage and we should be not dependent on one sector or one segment of the business. And we have been broad-basing our businesses in the same strengths what we have. We have not gone beyond our portfolio, what is there. We are able to interrelate our three segments of the business and accordingly diversify, allocate capital, and we have been very responsible on all margin acquisition, whatever we have done so far. This is the guiding philosophy we want to go ahead. India is changing on the manufacturing footprint. We are now viewed by the global companies very seriously, but we also should need the capabilities and capacities to execute those orders. So there has to be a time lag between investment and returns. So I think that is what today from the base of current base, we are trying to go into the next orbit of the growth phase. So there will be some time lag, and I request all of your kind understanding for this time. Thank you once again.
Thank you.